Good morning, hunters. Welcome back to the Daily Hunt for Multibaggers on this Saturday, February 28th, 2026.
That's right, and we've got a jam-packed show for you today. We've been sifting through a ton of data collected yesterday, Friday, February 27th.
Yeah, a real flurry of activity out there, Brooke. We saw a significant number of social media discussions flagging many different stocks that are grabbing people's attention. Overall, the market sentiment feels pretty mixed. There's a lot of cautious optimism, but also some serious red flags popping up.
Absolutely, Ethan. It's a real tug-of-war between growth potential and fundamental risk. Let's dive in.
First up, let's talk about SAT Space Mobile Inc., ASTS. This one always seems to generate buzz. Our data flagged it with high user engagement. Now, from a growth perspective, the upcoming earnings call on March 2nd is huge for ASTS. Users are really anticipating it, seeing it as a potential pump or dump event. If management can finally deliver on those promises and break the radio silence mentioned by the community, this could really turn around. The beta of 2.7 suggests it moves a lot, so that pump could be significant.
Well, Ethan, while that speculative optimism is certainly present, the KPIs tell a pretty sobering story for ASTS. The overall assessment is bearish, and it's clear why. We're looking at an EPS of minus 1.14 and a net profit margin of 0. The company isn't profitable, plain and simple. What's more concerning is the significant insider selling, over 1.7 million net shares sold. That's a huge red flag when those closest to the company are divesting. Previously, we've rated ASTS as either a speculative gamble or stay away. Based on these financials, I don't see anything to change that.
So for ASTS, despite the community buzz, the final verdict is?
Stay away. The fundamentals are just too weak right now, and the insider selling is alarming. All right, moving on to Palantir Technologies, Inc., PLTR. The user sentiment is neutral to slightly bearish, especially with a reported year-to-date decline of over 24%.
That's because, some users are already calling AMZN sleeping and are interested once the carnage settles. This indicates a belief in a rebound. And for good reason. Amazon is making massive investments in AI and cloud infrastructure, a $12 billion data center investment in Louisiana, a $50 billion strategic partnership with OpenAI. Analysts are calling it one oversold AI stock to buy before it rebounds. This is a powerhouse making smart, forward-looking moves to dominate the AI era with a solid 13.6% revenue growth.
Those are indeed significant investments, and the 13.6% revenue growth is strong, helping to justify its PE ratio of 29.33, which is high but far more reasonable than some of the other stocks we've discussed. We also see healthy insider buying, over 1.1 million net shares purchased. The net profit margin of 10.83% also shows good profitability. While the heavy capital expenditure could be a strain, the strategic moves in AI and cloud are undeniably powerful long-term drivers.
So with those strong growth prospects and solid fundamentals, what's our verdict for Amazon?
Based on the robust revenue growth, healthy profitability, and strategic moves in AI backed by insider confidence, AMZN warrants a buy. Investigate as buy. Amazon.com Incorporated, AMZN. Investigate as cautious buy. Paramount Skydance Corporation, PSKY. Investigate as speculative gamble. Nebulous Group NV, NBIS.
All right, hunters, that wraps up our deep dive for today.
Remember, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice.
Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred.
The market is a wild place, and knowledge is your best asset.